Good morning, ladies and gentlemen, and thank you for standing by. Welcome to Thales first half 2026 results conference call. The presentation will be held by Patrice Caine, Thales Chairman and CEO, and Jérémie Papin, Thales CFO. It will be followed by a question and answer session. If you wish to ask a question, you will need to press star 11 on your telephone and wait for your name to be announced. I must advise you that this conference is being recorded. I would now like to turn the conference over to Mr. Louis Igonet, VP, Head of Investor Relations. Please go ahead, sir.
Thank you. Good morning, everyone, and welcome to this presentation of Thales H1 2026 results. I'm Louis Igonet, Head of IR for Thales. With me today in the room are Patrice Caine, our Chairman and CEO, and Jérémie Papin, our CFO. As usual, this presentation is webcasted live on our website, thalesgroup.com, where the slides and press release are also available for download. A replay will be available soon after the end of the event. With that, I'd like to turn over the call to Patrice Caine.
Good morning, everyone, and welcome to Thales 2026 half-year results conference call. So let me begin with a few highlights of our performance in the first half of the year, and I'm on slide number 2. So first, we delivered robust order intake, mainly driven by defense and space, once again demonstrating the strength and the relevance of our products and solutions. Notable examples include major contracts to supply satellites to Luxembourg and Turkey, or air surveillance systems to Qatar, or radars to the UAE. Our sales growth was driven by the successful ramp-up of our defense activities, especially in sensors and effectors, together with the rebound in cyber and the resilience of our aerospace business. From an operational perspective, our continued focus on efficiency and competitiveness resulted in a robust year-on-year improvement in profitability. The first half was also marked by outstanding free operating cash flow generation. This performance was exceptional, notably reflecting the growth in order intake and our strong project execution. Now, beyond these financial results, we also reached several important strategic milestones during the first half of the year. We launched new solutions to enhance counter-drone capabilities and smart ammunitions. We entered into promising partnerships with Destinus, for instance, to support armed forces in counter-UAS and ground-based air defense through enhanced system integration and production ramp-up. We also entered with a partnership with Airbus Defence and Space, MBDA, Deutschland, Safran Electronics Defense and Destinus to establish the BLIXEM EXO Consortium, a multinational European industrial partnership to develop Europe's first sovereign exo-atmospheric upper layer interceptor program, or again with Renault to enhance our mass production. On top of that, we also enlarged our strategic partnership with Google to develop trusted cloud solutions now in Germany. And finally, in early June, we announced the planned acquisition of Exail with the ambition of creating a world-class player in autonomous underwater warfare, while further strengthening our capabilities in inertial navigation. So let us now take a closer look at the numbers, and I am on slide number 3. So as previously said, the commercial momentum in H1 2026 was particularly robust, with order intakes reaching 12.5 billion euros, a 22% organic increase year-over-year. The book-to-bill ratio is maintained significantly above 1, reaching 1.14. Sales reached 10.9 billion euros, growing by 7.8% organically in H1. And if we exclude the one-off impact linked to the constellation of 2 geostationary satellites, the underlying organic growth in H1 is close to 10%, at 9.6% precisely. Adjusted EBIT rose by close to 10% on a reported basis, while EBIT margin improved to 12.5%. Then, adjusted net income group share grew sharply by 13%, reaching 990 million euros for the first half. Free operating cash flow generation was exceptionally strong in the first half, reaching 1.8 billion euros, which is close to 3 times the level reached in H1 2025. Of course, Jeremy will further elaborate on that evolution. Net debt now, net debt stood at around 500 million euros at mid-year, to be compared to 1.6 billion euros at the 31st of December 2025. As you can see on the chart, over the last 12 months, net debt has been reduced by around 3 billion euros, which is a major achievement. So, moving to the next slide, and leaving the floor to Jeremy.
Thank you, Patrice. Good morning to everyone, and thank you for joining our call. Turning to page 4, order intake was solid in the first half of 2026, standing at 12.5 billion euros, a 22% organic growth. This achievement reflects a continued strong momentum across our businesses, with particularly good bookings in space and in defense. Growth was widespread, with all regions contributing. Europe and the Middle East leading the growth in H1. A benefit of our long-lasting presence in those regions, our engagement to remain close to our clients and to offer them highly performing products and solutions in the current context. In the first half of 2026, 18 large orders with a unit value above 100 million euros were booked. 7 in Q1, 11 in Q2. Of these 18 large orders, 13 were in defense, including a number of new contracts in air defense. We had mentioned the Santé new generation in Q1, and Q2 has seen further orders in air surveillance and air traffic management. The momentum was also good in the naval domain. Furthermore, the group recorded 5 large orders in space, both in observation, exploration, and in telecom, supported by sustained and robust institutional demand. Finally, our small orders, those below 10 million euros, were up 5% organically, which is another indication of the ongoing healthy underlying momentum of the businesses and the high granularity of demand across all our portfolio. Overall, the solid order intake performance confirms the strength of our positioning on growing markets and the continued relevance of our offerings. Now let me move to sales on page 5. In H1 2026, sales were up 7.8% organically to 10.9 billion euros. If we exclude the impact of the cancellation of 2 geostationary telco satellites in our space business, sales growth amounted to 9.6%, which reflects a solid underlying growth momentum. Each of our 3 segments contributed to growth in H1. In terms of geographies, sales growth remained well-balanced between mature and emerging markets. Europe posted a solid 9.4% organic increase, while emerging markets grew by 14.6%, including a particularly strong performance in the Middle East, up 36.7%. You will note that in H1 2026, changes in scope had a very minor impact, and currency impact was negative at minus 116 million euros, mainly linked to the evolution of the euro against the US dollar in the first quarter. Turning to slide 6 and having a look at the drivers of our group EBIT adjusted increase year-on-year. Adjusted EBIT for H1 2026 amounts to nearly 1.4 billion euros, up 10% year-on-year and 11% organically. The strong increase in our gross margin was the main driver of our adjusted EBIT growth in the semester. It is up 219 million euros, and the main contributors to sales volume growth were defense and aerospace. Part of this increase in gross margin was reinvested to support our future growth. R&D was up 9% and reached 6.2% of sales, and marketing and sales were up 4%. G&A expenses, up only 3%, are being constrained, growing at less than half the pace of sales and reflecting our focus on cost discipline. Finally, restructuring costs stood at 24 million euros in the first half, down by 30 million euros compared to last year. This is mainly explained by the ongoing execution of our space adaptation plan over the first half of last year, which incurred some restructuring costs back then. This plan is now over and paying back. Moving on to the performance review by segment and starting with aerospace on page 7. Orders in the segment reached 3.3 billion euros, up 24% organically, reflecting solid momentum overall. In avionics, order intake remained high, notably in the civil domain. Order intake in space showed strong demand from institutional customers. In total, 5 large contracts were booked in space in the first half of 2026, including geostationary telco satellites for Luxembourg and Qatar, and orders for major programs and missions such as Copernicus and ExoMars. Sales amounted to 2.8 billion euros in the first half, up 2.1% organically. This performance was primarily driven by avionics, where sales increased in the first half. Sales growth in Q2 was, however, a bit slower than Q1 as a result of the first impacts from lower air traffic on aftermarket activities. In space, underlying growth was solid over the first half. However, Thales has been notified of the cancellation of 2 telco satellites based on our Space Inspire platform, ordered back in 2022. This impacted sales by a negative 153 million euros over the semester. Given the positive underlying momentum with our customers and the quality of the Space Inspire platform, we are confident in our capacity to reuse what was achieved and delivered so far as part of this contract. If one excludes this one-off element, aerospace sales were up a solid 8.8% in the first half of 2026, reflecting the continued underlying momentum in both avionics and space. Looking at adjusted EBIT, the segment delivered a 130 basis points increase in margin to 10.4%. This strong progress was supported by an improvement in space profitability as it benefits from the successful implementation of the adaptation plan carried out since 2024. Meanwhile, avionics continued to deliver a high and solid contribution. Moving on to defense on slide 8. Order intake reached 7.4 billion euros, up 28% year-on-year, reflecting sustained and continued success for Thales products and solutions across many geographies, but notably in Europe and in the Middle East, where demand remains very strong. 13 large contracts were booked in the first half, compared to 6 in the first half of 2025. The strong performance was broad-based across the portfolio, as the vast majority of our products and solutions are addressing critical needs of our clients. In particular, air defense solutions saw strong client demand in the first half. It's also worth mentioning that 2 large orders in the first half were related to the development of the F5 standard of the Rafale, a key priority of the French military programming law. Defense sales amounted to 6.3 billion euros, up 13% organically year-on-year. This reflects another quarter of double-digit growth in Q2 at 11.9%, supported by the ongoing production ramp-up in sensors and effectors and by solid contracts execution across the defense business. Finally, adjusted EBIT increased by 22% organically in the first half, with an improvement in margin from 12.8% last year to 13.8%. Overall, these results confirm a solid, sustainable trajectory in the defense segment. Cyber and digital now on slide 9. Sales in the cyber and digital segments reached 1.8 billion euros, a 0.4% increase. In cyber, sales were up 1.6% organically year-on-year. Growth resumed in Q2 with a 4.5% organic growth. This is a positive evolution and a good sign that the business trajectory is recovering. Digital identity sales were broadly flat year-on-year. After a good Q1, Q2 sales declined compared to last year when our secured connectivity solution had recorded some non-recurring one-off orders. In payment services, digital banking solutions saw continued strong growth. However, those were more than offset by lower volumes in payment cards. Moving to profitability with adjusted EBIT down year-on-year. This decline is driven by a decrease in digital identity. H1 25 had benefited from two one-offs we mentioned last year. An exceptional contribution from a JV, Thales, and another one-off order in secured connectivity. In addition to that, margin was also impacted by some challenging situations in the market. First, in payment and services, where pressure is building in both volume and prices, but also in identity and biometrics. This activity, which includes secure travel documents, saw an impact in the first half from lower passenger traffic, and accordingly, less issuance and renewals of documents. In cyber, adjusted EBIT was up 5.5% organically, with a resilient margin at 14% while we resume growth. Moving on the first half of 2026 adjusted P&L on slide 10. The cost of financial debt and other financial results was down compared to last year. This improvement is driven mainly by lower net financial charges at minus 33 million euros, reflecting lower average net debt over the period. Foreign exchange results were also favorable in the semester. The finance cost on pension and employee benefits were stable year-on-year. The effective tax rate in the first half was nearly similar to last year and stands at 25.8%. It includes, this year again, a temporary additional corporate tax in France, which added an additional 57 million euros to our tax charge in the semester. Excluding this impact, the effective tax rate is stable at 21%. As a reminder, the additional corporate tax is expected to stand at nearly 100 million euros in 2026. Minorities year-on-year evolution reflects the further reduced net losses incurred in Thales Alenia Space and as the company's operating profit turned positive. Overall, adjusted net income group share stood at 990 million euros, up 13% compared to last year. Turning to free cash flow on slide 11. The free cash flow was somewhat exceptional in the first half of 2026 and stands at 1.9 billion euros versus half a billion euros last year. As you can see, the main driver of this performance was a significant improvement in change in working capital, driven by a continued supportive momentum in the order intake, with a very strong semester, as I detailed earlier, coupled with favorable phasing in customer payments. This reflects Thales' long-standing ability to execute projects well, which is obviously a key focus for the group. As you know, a target of adjusted net income to free operating cash flow conversion was upgraded early July, and we now aim at reaching 100 to 110% conversion ratio in 2026, which is obviously strongly supported by the H1 performance. Before handing over to Patrice for strategy and outlook, let's look at the net debt evolution over the past 6 months. Net debt amounted to 519 million euros as of June 2026. This is down 1.6 billion euros and compared to a negative 1.6 billion euros at the end of December 2025. This is nearly a 3 billion euros reduction in net debt since June of 2025. The main driver of the decrease in net debt is, of course, the exceptional free cash flow generation we just reviewed. The group also paid 606 million in dividend in the first half, and new leases amounted to 178 million euros. Our financial position is very sound, we have ample means to finance our growth going forward, starting with the planned acquisition of Excel that we announced a couple of weeks ago. Thank you for your attention. I now turn over the call to Patrice to review the group's strategic priorities and guidance.
Thank you, Jeremy. Moving now to slide 14, which is a kind of a recap. Thales is well positioned on markets, offering strong growth and long-term visibility, supported by a comprehensive product portfolio and a broad customer base. We continue to see attractive growth opportunities across our three core businesses: defense, aerospace, and cyber and digital. If we start with defense. In defense, demand for our products continue to grow, driven by the current geopolitical environment all around the world. The breadth of our products, spanning across air defense, maritime warfare, effectors, electronic warfare, among others, together with the diversity of our customer base, provide a strong foundation for sustainable long-term growth. Our strong commercial momentum and our continued ramp-up of our industrial capabilities will continue to support our fast pace of organic sales growth. Looking ahead, as already said, the planned acquisition of Excel will further strengthen our strategic position in the autonomous underwater systems domain and in inertial navigation. Now moving to aerospace in a nutshell. Well, in avionics, the underlying market fundamentals are solid, of course, supported by structural long-term growth in passenger demand for air travel. And this is the case regardless of temporary uncertainties, related to the current situation in the Middle East. In space, activity continues to benefit from Europe's growing focus on space sovereignty, supported by an unprecedented level of public funding. Typically, the last ministerial conference, 2025-2028, has secured 22.1 billion euros for European space programs, increasing the European Space Agency budget up to 30%. And looking further ahead, the next EU multi-annual financial framework is expected to allocate around 70 billion euros to space, almost double the amount under the previous one. And this favorable space environment is also very promising for the Bromo project, as well as for future growth opportunities. And finally, cyber and digital. Well, in cyber and digital, demand continues to grow as well, with AI typically acting as a key market accelerator. We expect AI to strengthen our position by accelerating the digital and AI transformation of our customers, and therefore growing the need for cybersecurity as cyber attacks continue to grow in both scale and sophistication, leveraging AI. These trends are driving demand for detection and response services, application security, and data protection, to mention a few. To address these evolving needs, we will continue to expand our portfolio with new solutions, including, for instance, our next generation HSM, hardware security modules, namely Luna 8, a new data security posture management solution, or another example with our forthcoming AI security fabric solution expected in 2027, next year. So moving to the last slide 15. Well, the performance in the first half confirms the trajectory of durable and profitable growth on which Thales is established, and we are entering the second half of 2026 with confidence. The robust momentum and strong visibility enjoyed by the group, in particular within defense activities, has led us to upgrade two of our 2026 guidance items a couple of weeks ago, which are, number one, the expected book-to-bill ratio for 2026, now expected above 1.1. And number two, the conversion rate of our adjusted net income into operating free cash flow for the year, now expected between 100% and 110%. Therefore, we are confirming our objective to deliver